to host all of you for the first webinar in a series focused on the climate and disaster risk finance for agriculture. My name is Sumati Rajput, and I'm a senior financial sector specialist with the World Bank Group, working on risk finance solutions globally. We're very pleased to kick this series off, organized by the World Bank's Disaster Risk Finance and Insurance Program, in partnership with the ASEAN Secretariat, the ASEAN +3 Disaster Risk Finance Initiative, and the Southeast Asia Disaster Risk Insurance Facility. Next slide, please. So to give anyone who isn't familiar with this series what is expected over the next few weeks, we have structured this series across 4 webinars. Today is the first webinar in the series, and today's focus will be around policy, legal, and institutional considerations when thinking about climate and disaster risk finance for agriculture. The subsequent series will focus on government-supported programs, public-private partnerships with a focus on market-based instruments, as well as data analytics and technology. So if you were to think about it, these are essentially various aspects that governments think about when they're structuring their programs for disaster risk finance for agriculture. And that's really the outcome of this series, which is to have governments have a better understanding of what this means conceptually. Next slide, please. So just to set the overall context, I think everyone connected here is well aware of the importance of thinking about risk finance when it comes to agriculture. Most low and middle income countries are highly reliant on on agriculture as a driver of their economies. And whenever there's any kind of a climate or a disaster related shock, agriculture is immensely impacted, which then affects be it the main economic drivers, the MSMEs in countries, or livelihoods and lives of poor and vulnerable households. And so thinking about that is absolutely fundamental. The reason why we're having this series, so this is really a third in the series on this topic, and that's because there's been immense interest in the ASEAN context, but also in the Europe and Central Asia context, to be able to learn from one another and share global experience in the region to be able to develop these solutions in the region. So key objectives really are around ensuring that this collaboration can be fostered across member countries joining from the ASEAN region, and then also globally as well, particularly with ECA. And you'll see that plays into why the timing of the webinar is such, because that's where we saw the most interest from counterparts, and we hope, of course, other global colleagues can join as well. Next slide, please. So the way in which the webinars are structured is a total of 4. Each webinar is 90 minutes. It will be a mix of presentations and Q&A. For the Q&A to work effectively, please do share your Q&A during the sessions via chat, especially if you didn't share them during registration. There's a little bit of a prize for whoever attends all the webinars. You get a certificate which says you've completed it. And who knows, if we're able to continue the series, then there could be more interesting future webinars as well. Today's session will be 90 minutes as well. We'll have a few opening remarks from our guests. We'll have a framing presentation to set the context of the topic. We'll have country presentations from Vietnam, Cambodia, and Turkey. And then we'll have a session followed by Q&A with closing remarks at the end. A few housekeeping rules before we kick off. So, of course, please keep your microphones muted. Otherwise, we will mute them for you. Please don't be upset. Please use the chat function to submit questions that we can then pick up during the Q&A. Of course, we will prioritize those that were submitted in advance, but we will integrate as best possible those that come during the chat. Otherwise, we'll follow up with you on email. Session materials will be shared with participants after the session. With that, I will do very little talking and kick off the session by inviting our first speaker to open and welcome the session. We are pleased to have with us today Mr. Francesco Strobe, who is an Italian national as part of the who's been part of the World Bank Group since 2010 and currently serves as the practice manager in the Finance Competitiveness and Innovation Group in East Asia Pacific. He's led financial sector development projects across various countries in Africa, Asia, and Eastern Europe. And most recently, before this role, was leading the country office in Indonesia on all financial sector related work. He now oversees work across 8 countries in the financial sector and private sector agendas, Cambodia and Vietnam being ones as well. So we're lucky to have those colleagues connected on the session today. So Francesco, with that, over to you.
Thank you, Sumati. Ladies and gentlemen, colleagues and partners, welcome to the first session of our Global Knowledge Exchange on Agriculture Risk Financing, focusing on policy, legal, and institutional frameworks. It's a privilege to convene policymakers, practitioners, experts, and colleagues from around the world, including distinguished participants from the ASEAN +3 region. Today's event is very timely. Just last month, in September 2024, Super Typhoon Yagi swept through the Southeast Asia region, causing devastating damage. And among the participants here today, I understand that some of you are working tirelessly on recovery and reconstruction efforts. Agriculture plays a vital role in most economies, serving as a mainstay for over 2.5 billion people worldwide. And in the ASEAN +3 region alone, the sector contributes 25% to total regional employment and 7% of regional GDP. So, however, the sector's vulnerability to disaster and climate risk is a primary concern for all countries. The statistics are alarming. Between 2008 and 2018, natural disasters caused $108 billion in damages to agriculture in developing countries, with production losses reaching $280 billion across all income levels. And the increasing frequency and intensity of severe weather events, such as floods, droughts, and storms, further exacerbate the challenges faced by the agricultural sector. The agricultural sector's vulnerability to disaster is then worsened by the low access to suitable and affordable climate risk financing and insurance products and services. Given these escalating challenges, it's a pressing priority for all of us to work together and share knowledge about agricultural risk financing, address the widening gaps in agricultural risk financing, building robust and sustainable policy and institutional frameworks, and contribute to greater food security and a more sustainable and resilient future. So, ladies and gentlemen, at the World Bank, this topic has never been more important, as the World Bank is emphasizing the importance of resilience against future shocks, treating climate change, crisis preparedness, and response as global public goods. In early 2024, the World Bank approved its new Crisis Preparedness and Response Toolkit, giving client countries greater flexibility and faster access to prearranged financing, including cash during emergency, contingent financing, and more options for catastrophe insurance. Knowledge and partnerships are also very important to the World Bank's delivery of integrated package of solutions to tackle increasingly complex challenges. Just last week, at the World Bank Group annual meetings in Washington, D.C., the bank announced a pivotal approach to build a comprehensive ecosystem for agribusiness with smallholder farmers and producers organizations at the center. As part of this approach, we will be working with public and private players to mobilize capital to shape the future of food system, raise living standards, and employment. The RFA will provide important tools to de-risking lending, to the agriculture sector, and to protect rural livelihoods and production. We have been working with global partners and regional initiatives such as SEADRIF and the ASEAN +3 CDRFA initiative as part of our collective commitment to enhancing financial resilience of the agriculture sector and rural livelihoods against natural disasters. So to conclude, I'm very glad to see that the webinar series will discuss all these issues today and in the coming weeks, going from upstream policy work to downstream designing and implementation of financial solutions, including through partnership with the private sector, academia, and other stakeholders, to enable and mobilize private capital at scale to complement the limited public funding sources. I'm very pleased to see many distinguished speakers from different regions, institutions, and sectors at this event. Your dedication and insights will be instrumental to cross-fertilization of knowledge and collaboration. I'm very happy to see also many of you here participating at this workshop. And thank you all for your time and efforts for making agriculture more resilient through your daily jobs at home. I would like to thank our partners, SEADRIF, ASEAN +3 DRF Initiative, and ASEAN Secretariat for co-hosting this workshop. And last but not least, let me thank the World Bank team for all the hard work to put together this event. Finally, I wish the event a big success and all of you a good health. I invite all participants to actively participate and share their valuable perspective so that all of us can work together to build a resilient agricultural sector. Thank you.
Thank you very much, Francesco, for setting the context for the webinar series, acknowledging our partner support and also indicating some of the bank's core priorities in this area. We'll now invite our second guest speaker for the opening, Mr. Yoshihiro Kawai. Mr. Yoshihiro Kawai is the chairman of the ASEAN +3 Disaster Risk Finance Initiative, also the Secretary General of the initiative. He's also the board chair of the SEADRIF Insurance Company. He is the chairman of the OECD Insurance Company, the Private Pension Committee, and also the Secretary General for the Global Asia Insurance Partnership. You can see he's very busy, so we're very happy to have him here with us. He has held many positions in the past with the International Association of Insurance Supervisors. He joined them in 1998 and has since worked with them in many, many different capacities. He held the position of Secretary General until 2017. And in his time, there was also the board, also part of the Financial Stability Board. He also is a professor at Tokyo University, and this is what keeps him in Japan. Perhaps it's what he likes the most. But with that, maybe I can pass it back to Yoshi to please take us through the opening.
Thank you very much, Sumati, and good evening or good afternoon, good morning, everybody. I understand this participation is around the world, so I really appreciate your participation. Now we have around 150 participants, so it's extremely important event. And as Francesco very much clearly explained, agriculture sector is very, very important sector for particularly developing countries. So for ASEAN context, we have 1/4, 1 out of 4 employees are coming from this sector, and also it's play an extremely important role for the economy. But one important character about agriculture sector, farmers, is extremely vulnerable to disasters, particularly natural disasters. Once, huge hurricane or flood occurs, it's very vulnerable. Or sector itself, farmers itself, very small, and they have usually not hold extremely extreme event. So definitely we need some policies to protect them. And therefore, this seminar is extremely important to understand what agriculture protection is. And SEADRIF, which I chair, is an organization which initiated 2019, and we provide protection to farmers or to the economy through our government. And naturally, agriculture sector is very, very important sector for us to provide protection. Recently, as Francesco mentioned, Hurricane Yagi hit our region, ASEAN region, and we have a protection. We have a flood protection to Laos, and we provide immediately within a few days $3 million protection fund to the Laos government, and that would save enormously immediate fund need for Laos. So what is important, what disaster occurs, is of course, reserve itself, the government reserve itself helps. But if the huge disaster occurs, we need some protection like insurance. And SEADRIF is a body to provide those protection. And immediate payout is extremely important. So we provide immediately by using parametric insurance and so on. But these function is not well understood and well not recognized by many countries, policymakers, industry people, and so on. So our role is not only provide protection, but as seminar demonstrate, we want to make you understand what's the benefit of these protection preventive measures. So we call it knowledge solution to understand our system, insurance, preventive measures, ex-ante measures is extremely powerful and important, particularly those vulnerable sectors. So SEADRIF ourselves and the ASEAN +3 disaster risk initiative is playing important role to provide protection and also disseminate and capacity building in collaboration with the World Bank. And I really appreciate World Bank to initiate this agriculture sectors, protection of financial disaster, financial, measures seminar, so that all participants understand well what kind of policy measures is available and what kind of protection measures is available and how we can best use of that. I hope that you understand very well and you use this knowledge for your daily work. And I really appreciate World Bank and colleagues who makes a presentation speech and to organize this event. And definitely all participants, 150 participants, all of you hopefully get benefit from this event. And I wish you all to the very fruitful discussion and dialogue and the journey to improve our economy sustainability and particularly agriculture sector. So thank you so much for this event and looking forward to the seminar itself.
Thank you so much, Yoshi-san, also for elaborating on the context, highlighting the key role that SEADRIF plays for its members in the region, and also way forward for how we all need to work together to make a more resilient Southeast Asia. So thank you for that. With that, we'll move on to the framing presentation for the day. So as just to bring back what I said in the beginning, this is the first of a series of webinars, and this webinar will be focused on policy, legal, and institutional considerations that countries need to think about when it comes to setting up programs for agriculture risk finance. There's obviously a focus on better understanding policy priorities, thinking through what are existing or required laws in place, what needs to be done, and how do you ensure that there's adequate engagement of stakeholders within across government. And I'm very pleased to say that we'll have my colleague Hang Tu Vu, who works in the Crisis and Disaster Risk Finance team as a senior financial sector specialist, who will take us through this presentation. Hang has worked in the insurance industry previously, and in the World Bank, she's worked with the team many years, leads a lot of the engagements in the ASEAN region, and also supports countries in the region as well as in Europe and Central Asia. So with that, Hang, over to you to take us through the presentation.
Thank you so much, Sumati, and it's a pleasure to be here today and to deliver the framing presentation to set the stage for our discussion later, especially, giving some of the context so that our speakers can elaborate later on in their presentation and sharing their country's experience. So as Francesco and Yoshi just mentioned that, the agriculture sector is very important, in all our economies, right? And, because of the vulnerabilities of that sector, then, it does have, a lot of impact on our daily life and our economies. So I just go through very quickly on the importance of the sector, and how these impact, will have some of the other spillover impact on the other parts of the economy. So I won't repeat what Francesco just mentioned, but just to say that, agriculture is really important in the sense that, it's a key source of livelihoods, it's a key source of job creation, and it has a critical impact on food security, our future, our food system. And, in terms of trade and global value chain, then, agriculture is provides the strategic commodities in our global value chains. And the sector is very vulnerable to disaster and climate risk these days, especially with the intensifying trend of climate change. And our farmers, right, and agribusinesses, they have to suffer the direct losses from all these disasters, including, the physical damages to their crops, to their livestock, the loss of yields, and also, production input. But at the same time, the impacts can ripple across all parts of the global value chain, right? And including, from production to processing and manufacturing, and to distribution as well. And finally, to our consumption, in our daily meals at home, or somewhere else in the world. And especially the impact from disaster and climate change on the job prospect as well, including, like, for example, reduced hours, of laborers, and wage cuts and layoffs, potential layoffs, among our workers. And especially, what it means for government is that, agriculture's vulnerabilities to disaster and climate change is really a big driver of contingent liabilities for our governments. These can come from in the form of explicit contingent liabilities. For example, some government, they have to commit, before this disaster happened, of their potential fiscal support to the farmers and their livelihoods. But at the same time, in some countries, then, these can cause implicit contingent liabilities. Especially, like there would be a lot of expectations or pressure on the government to provide support to this sector. Next slide, please. So why do we have to work on disaster financing for agriculture? So I'm sure that you understand the benefits very well, but just to summarize here that, we work on this measure is, to ensure that pre and post disaster funding for agriculture activities and livelihoods are there, and timely, to make sure that, all the resources are there to support the farmers and producers. Risk financing for agriculture can protect rural households from large-scale disaster, and they can prevent very harming coping strategies such as asset sales or migration of labor. And disaster finance for agriculture can also foster agriculture growth and innovation by providing a financial safety net to the farmers, enabling them to invest confidently and improve their productivity and recover more quickly, from this crisis. Next slide, please.
I think we have Hang maybe frozen because she's having some connection issues. So perhaps we'll give it 30 seconds. Yes, we can hear you now, Han.
Okay, so can you move on to the next slide? I'm sorry, I am having a bit of technical issue here. So what is risk financing for agriculture against disaster? Apologize for the technical issues. So what does that mean for risk financing for agriculture? So, when we think about these, solution, then, one important point to note is that, one type of instrument or one type of measure cannot fit all type of problems that are facing the countries, right? So, different segment of farmers and will need different solutions. Smallholder farmers, will need very different solutions from, commercial type of agriculture producer. So, we need to develop a risk finance instrument and, under this work stream to target different, type of agriculture segment here. Next slide, please. So, what can government do to support risk financing for agriculture? This is a very typical strategy or approach that sovereigns can take, to design and implement risk financing for agriculture solutions. including the layering approach, where they will help the government to think about the different layers of risk, based on the different layers of targeted beneficiaries, as I mentioned earlier, about targeted segment of the agricultural population, and then based on the severity and frequency of these potential risks to this segment, then they can arrange different type of solutions to meet the demand from these segments. Next slide, please. So, in practice, then how household, small and medium enterprises and government manage the risk of their agriculture production. So you could see that there are different strategies that are currently employed by this segment, and for household, one of the most common use of risk financing is risk management techniques is that they will resort to a lot of the informal like lending and informal financial services to support their own coping strategies. And in the worst case, right, in the case of very high risk and big catastrophe losses, then there's a tendency for them to reduce consumption, removing children from school, selling their productive assets, and and potentially like they can default on their loans as well. So there's a big there's a big risk there, in terms of coping strategy for smallholder farmers. Now for MSMEs, a typical strategy that they do is on using concessional loans from the government, and also some other potential use is that they can resort to some of the lending and other type of insurance as well. But for a lot of the MSMEs that we have seen in our work around the world, then the access to finance is really something that we need to consider, especially the level of inclusion, financial inclusion, and financial literacy as well. Next slide, please. So what are the key considerations that the governments should take into account in designing the risk financing for agriculture frameworks? So there are three prong approach here, in terms of policy side, legal and regulatory side, and also institutional arrangement to enable successful implementation of risk financing solutions. Next slide, please. So in terms of designing the policy framework for risk financing for the agriculture sector, there are so I tried to lay out here, 7 key factors, to take into consideration for designing an effective policy framework for risk financing for the sector. So the first thing will be about understanding risk, right? So it's very important to understand the risk, and that will enable all the other subsequent action in terms of designing the policy framework later. Now, I just wanted to focus on the 2 key things here. One is that, defining clear policy objectives and priorities is extremely important, especially understanding, which are the beneficiaries that the program want to target. And, especially, it's very important to link risk financing to risk reduction, because people tend to think about risk financing, but actually, we need to think about risk reduction first and foremost, because, this will be a very important measure to reduce the risk, before risk financing measures can kick in. The other thing, that we should be mindful of is also on inclusivity, especially in terms of gender and socioeconomic sensitivity, and also demographics as well, And the second point here that I wanted to emphasize is on the modalities of funding. In any policy that we are contemplating, it's important to understand, what type of funding are out there available for the program, and how to make the funding sustainable for the program as well. These can come from different sources, but something to contemplate very early in the process. Next slide, please. So here's an example of Kenya, where the country have used, different type of risk layers, to arrange a solution. But very importantly, from the policy setting is that, they set out very clear policy priorities, a very well coordinated approach, and very well aligned with the overarching, development goals of the country, including, on, aligning with the overall economic growth, objectives, and also, in terms of, protection, for the different targeted beneficiaries. Next slide, please. Now, in terms of designing the legal and regulatory frameworks, this type of, design will follow on from the setting out very clear policy objectives. And we can see that a few key building blocks under the legal framework, including on legislation on public financial management, one of the speakers today will further elaborate on, and also legislation on the financial sector, where I wanted to mention that, the importance of not only regulating, the insurance sector or the financial sector, but also, on putting out the measures out there for, policyholders' protection and education. And also, to incentivize, innovative financial instruments. The other thing is very important as well as on public-private partnerships, where the engagement of the private sector will be extremely important. And also, the framework for use of data collection, reporting, and especially in a very fast-changing environment of technology today. These regulation on data privacy, data protection, is very critical. Next slide, please. So on the institutional arrangement, just a very quick point to highlight is that, clear roles and institutional responsibility is very important because, this topic cut across so many sector and institutions in one country. So, setting out the roles and responsibility from the beginning and, giving a clear mechanism for collaboration among these institutions is very important. And also the oversight and accountability mechanism, will be key in terms of, monitoring and implementation. So next slide, please. So I will be concluding on the final example of India, where, they have set a good example in terms of setting out, the risk financing legal framework and also institutional framework where, the key building blocks are there, including on funding, including the use of technology, including engaging private partners, and especially in terms of state and local government collaboration. And I wanted to emphasize the importance of promoting climate and disaster resilience in the context here, the risk reduction and climate change adaptation and mitigation. So risk finance is part of all these things. It's not a standalone menu of option, but it's very much linked to all in the work that we're doing on risk reduction and mitigation. So
I think Hang is having some connection issues. So in the interest of time, I will just summarize, I think, what she would have wanted to end on, which is really that, it's critical that countries think about how they go about developing their programs, because you want to understand that different solutions target different groups. It's important to have clear priorities. It's important to develop robust policy and regulatory environments that support those priorities. And then it's important, of course, to have adequate financing to be able to implement those priorities. And with this, I think it's a nice segue to actually hearing from countries who are doing this very well. So I would like to invite our first country presenters. We have two presenters from Vietnam who will talk about the importance of having robust public financial management policies in place, who will talk about how these, are effective in putting in place solid disastrous finance agriculture programs, and then also the importance of bringing different partners together. So without further ado, I would like to invite first Ms. Thieu, who is the Deputy Director in charge of the Public Finance Policy Division attached to Ministry of Finance in Vietnam, She specializes in the state budget, in state budget and public debt management. She is responsible for conducting research, analyzing economic issues, and providing advice to government on their policies. After Ms. Tui, we will have Ms. Puang Mai, who serves as the Deputy Head of Non-Life Insurance Division at the Insurance Supervisory Authority within Ministry of Finance in Vietnam. She's worked here in the association for in the authority for since 2005 and specializes in financial matters, including capital management, investment strategies, and insurance reserves. So the floor is yours from my colleagues from Vietnam.
Yeah, thank you so much. It's my pleasure to be here today to deliver about the disaster risk financing in Vietnam. So for the first slide, I would like to give you an overview about the impacts from disaster and climate risks in Vietnam. According to the World Bank, Vietnam is ranked among the 5 countries likely to be most affected by climate change. And about 70% of people who live in coastal area who may hide exposure to storm and flooding when climate change. And according to the World Bank too, climate change will reduce about 3.5% of GDP by 2055. And recently, in September 2024, Vietnam experienced the Typhoon Yagi. It's one of the biggest typhoon in 70 years in the country. And it killed more than 300 people and damage reached about more than 3 billion US dollar. So Vietnam is highly risk from the climate change. So next slide, please. So the government have some legal or policy framework for the disaster management. So today, as you can see from the slide, we have several tools or the legal framework to manage the risk. The first one is related to the state budget law or law sub law regulation. We specify the regulation on the state budget financial resources. And the second one is the tax laws will give you some disaster tax relief. And otherwise, we also have the disaster prevention and control funds. We also have some financial tools to cope with the situation like insurance or credit. According to that, we have an insurance law or credit law. We also have a borrowings from the foreign countries or voluntary contributions. So it's the financial sources for the disaster risks. So next slide, please. So for the time limitation, so I will focus on the three first financial resources. The first one is the state budget. The state budget, if you can see, the first one is the expenditure. Before the disaster, Vietnam have prioritized the investment resources to develop infrastructure to enhance the capacity to respond to climate change and disaster, as well as the investment expenditure. We also have a recurrent expenditures for the upgrading disaster prevention and control works or the disaster prevention and control activities. And post disaster, we also the government have the policy to support the people who have affected by the disaster or spending of the government. We also have a contingent budget. It means that the government will arrange around 2 to 4% of the total expenditure of all levels for the natural disaster prevention and response to recovery. When we use on the contingent budgets, we will use the financial reserve fund. and provisionings for the financial reserve fund is made gradually each year, with maximum controls level is 25% of the annual estimated expenditure basis of respective level. And finally, we also have a support or programs. For example, to support for the agriculture, we have a degree number 2. That's policy to support for agricultural production in the areas damaged by the natural disaster and epidemics, for the relief support by the state. Otherwise, we also have a national target program for the climate change response or the green growth. In just about the state budget. And next slide, please. And for the people who are the corporation or objective who are damaged by the disaster, we have a tax policy like tax exemption or reduction policy to reduce the tax or fee burdens for those who suffer damage due to the natural disaster. For example, like we extend the tax payment for the people who suffer damage after production or business due to the natural disaster, and the maximum for the time extension is 2 years. We also have an exemption or reduction. It's specified in the CIT or PIT or excise tax or import or export tax. They have policy to support for the people who suffer from the natural disaster. Next slide, please. And one of the funds, in addition to the financial reserve fund, we also have a natural disaster prevention and control fund. This fund is off budget fund, and it at the levels center. At the central level, we have a Vietnam Natural Disaster Prevention Control Fund, and in the province, we also have a provincial Natural Disaster Prevention Control Fund. And it's a non-budget fund, and it can organized by one member limited company or stakeholder 100% of charter capital. And the resources of this fund is depends on the contribution of the international or domestic organization or people. And it spends for the relief or support for the disaster recovery or support for the preventive activities. And the result of this fund is mentioned in the next slides. According to the data of 2024, Vietnam have 63 provinces, so 62 provinces has a fund have revenue, and 57 provinces have an expenditure, and the revenues of this fund is around 5,000 billion Vietnam dong. So next slide, please. So I just focus on three main financial resources for the disaster risk management. And according to the current situation, I just underline some challenges. The first one is disaster risk management financing in Vietnam now is quite lack of comprehensive disaster risk management financing. I mean that we just cope with the situation that is not too large. I mean that's we lack of financial resources for the natural disaster with a lot of 2 to 3% of GDP. And in addition to that, it's a shortage of resources. The main sources do not meet the demand for the responses and recovery, and it highly depends on the state budget. And the state budget is just meet 25 or 35% of annual disaster recovery spending needs. And finally, it's the legal framework is quite newly developed. So we should to develop more tools like insurance, bond, etc. And it takes more time and long-term roadmap. So I think it's the end of my presentation today, and I will hand over to my colleagues in insurance department to talk more about insurance for agriculture.
Thank you so much. That was very interesting. Over to Miss Fang Mai for the next 5 minutes or so on the insurance aspect. We don't hear you yet. Yes. Thank you.
Firstly, I would like to say thank you for you to give me an opportunity to share our experience in the insurance, agricultural insurance. So Ms. P already go through quite detail about the structure of the financing, climate financing insurance. So I go through the insurance, agricultural insurance in slide 5, please. In slide 5 for the Vietnam, that's slide. That's slide. For agricultural insurance, we have. So sorry. Can you go to the agriculture in slide 6, please? Oh, it's just the challenge. It's the challenge is the final slide.
Go behind, please. This slide.
Yeah.
I think. Yeah.
No.
No, the slide
behind,
before.
please. Go behind, please. No, that slide, please. So the insurance, agriculture insurance, this is a voluntary product. So I would like to talk about the overview of the agriculture insurance. So the agriculture insurance, we have, this is a result for the agriculture insurance from the 2018. So you see that we have $1.6 million for the revenue in 2023, and accounted is 0.06% of non-life insurance market, and we have only 11 insurance company provide agriculture insurance. As you know that in Vietnamese market we have 32 non-life insurance, but only 11 insurance company provide agriculture insurance. So next slide, please. The next slide, please, is in slide 8, agriculture insurance. Yes, that is would like to share the government back in agriculture insurance. That's the product, risk cover and government support. The product we insured is the rice, rubber, pepper, cashew, coffee, livestock, and aquaculture. And the risk cover, we cover 19 natural disaster risks for rice, 9 for crop, and 17 for livestock, and 16 for agriculture. And government subsidies, the state will provide up to 90% subsidies for poor and near poor household, and 20% for the other household, and 20% for the agricultural organization. This is subsidies for the premium. So go to the challenges for agriculture insurance, please. So right now we have faced with so many challenges for agriculture insurance. As you know that we have only 11 insurance company to create a insurance product and to launch insurance products to the market, because that we lack the involvement of the international reinsurance, and the risk for the insurance is very difficult to cover. So, and as you know that we will talk first that the insurance, the agriculture insurance is a voluntary insurance, so low farmer education on the insurance benefit, and low farmer can understand clear about the insurance product. And the second is the limited insurance product, especially for the agriculture. Small scale farming, complicated risk pooling, and of course the insurance company lack of financial capacity, skilled staff, and broad network, reaching remote areas like village and the communities. And the last is limited participation of non-life insurance companies. And we would like to share that we have amended the decrease for the agriculture insurance. And on this occasion, we hope that we can receive your experience for launching the agriculture insurance and via the regulation on agriculture insurance. And then when we look forward to receive your sharing and your knowledge about the agriculture insurance, and then we can get some information and change and amend our policy to create the insurance product for all over the farmers. Thank you so much.
Thank you very much for that very interesting presentation by both the colleagues, especially highlighting kind of the many ways in which Vietnam is thinking about the agriculture risk, also on the focus on insurance, and then a point that you made towards the end, which is fascinating, around how can the region even think about this collectively to see what are the common challenges, what are the common solutions to come together and think about joined solutions for this. So thank you very much. And we have some very interesting questions in the chat that either we'll pick up during the Q&A that are for Vietnam, or we will email you after if we run out of time. I'll now like to move on to the next country presentation, which is focused on Cambodia. We will, interestingly, I picked up a few questions in the chat around how do you think about embedding disaster risk finance for agriculture within your disaster risk finance strategy? How do you think about financial solutions like insurance within your disaster risk finance strategies? And I think our colleague from Cambodia will actually touch on these points, because he will talk about how to integrate this within the national DRF strategy, and also how to think about linking disaster risk management, risk reduction, climate mitigation more closely with the risk finance agenda. So with that, it gives me great pleasure to invite Mr. Somphai, who is the Deputy Secretary General of the General Secretariat of Non-Bank Financial Services Authority of Cambodia. Dr. Somphai has over 25 years of public service experience and has played a very crucial role on disaster risk finance activities. As the Vice Chairman of the DRF Committee, he has led technical working group in preparing Cambodia's DRF strategies and has been endorsed by the Deputy Prime Minister and the Ministry of Economy and Finance. So with that, Mr. Somphai, over to you.
Yes, thank you, Sumati. First is good morning, good afternoon, and good evening to everyone. Thanks for the great participation today. And my name is Somphai. I am the Deputy Secretary General of the Non-Bank Financial Service Authority in Cambodia. I have been cooperating with World Bank team in developing the disaster refinancing strategy for Cambodia. Today, I am honored to have the opportunity to deliver a presentation on the climate and disaster refinancing strategy agriculture. On the agriculture and rural livelihood, the disaster fund in Cambodia is, according to the Cambodia Socio-Economic Survey did by the National Institute of Statistics of the Ministry of Planning and released in the December 2022, indicate that about 80% of the local household engaged in wet season crop production, mainly rice being the primary crop. Around 50% of the total household raise livestock. This highlights the significant role that livestock farming played in agriculture sector and rural livelihood in the country. Around 30% of the agriculture household in Cambodia are involved in fishing and aquaculture activity. Regarding to the ADB 2021 research that published that agriculture production is small household driven with the average land holding size of 1.3 hectare. According to the publication of the Family Farming Knowledge Platform by FAO 2017, the average householding size is of 1.3 hectare, reflect to the modest scale of the farm. Impact of flood on the agriculture. In the 2021, over 300,000 hectares of rice paddy destroyed. Estimate loss of around 250,000 metric ton of rice. In 2020, around 190,000 hectares of rice paddy affected. Estimate loss of around 400,000 metric ton of paddy. Significant damage to infrastructure such as irrigation system and road hinder the ability of the farmer to recover from the flood and resume production. Based on this impact, we have prepared the National Agriculture Development Policy for the year of the 2022-2030, Disaster Refinancing Strategy 2023 to for the year 2023-2028, a National Action Plan on Disaster Risk Reduction 2024-2028, and Cambodia Food Reserve System. Next slide, please. On the agriculture development policy prepared that I had been raised before, prepared by the Ministry of Agriculture, Fishery and Forestry, is also a policy-related disaster refinancing strategy for agriculture. In the National Agriculture Development Policy was approved by the Council of Ministers in September 2022, aiming to promote the growth of the agriculture sector through increased productivity, diversification, and competitiveness trade. 4 main areas and thematic policy for intervention are determined as below. Modernizing the commercializing and agricultural value chain. Public and private investment in the agriculture sector. Growing sustainability and increasingly resilient to climate change and institutional reform and cross-cutting issue. For all the policy the development, it means when we do the policy, normally we create one called technical working group that relating to all the line ministry and the or institution or the agency that related, and then we do the consultation and do many public awareness, public seminar to the public also. Yeah, next slide, please. Disaster refinancing strategy 23-2028 outline the government plan to enhance the country financial resilience against disaster and climate risk. This initiative aims to build knowledge, resource, and financial solution to better protect the population, economy, and promote sustainable development. The strategy was approved yearly by our Deputy Prime Minister, Minister of Economy and Finance. For priority of this disaster financing strategy are divided into 2 main parts. One is development of the disaster refinancing enabling environment on the left side. And the second part is the tailored DRF solution. On the first part of the development of disaster refinancing enabling environment, it has 3 points that important on that. It's conductive legislation and institutional framework, improve risk-based data and analytics, improve financial instrument funding source. And on the right side, it means the tailored DRF solution. It's strategic priority for vulnerable population and sector, including agriculture sector refinancing program. Shock responsive public asset and service protection program. Improve DRF capacity and capability. Among these priority, disaster refinancing for agriculture is one of the sector priority in the DRFS strategy, disaster refinancing strategy. Next slide, please. Another policy related to the disaster refinancing is National Action Plan on Disaster Risk Reduction, which was officially launched on Monday, September 2nd, 2024, to continue effort in addressing disaster-related challenge. In Cambodia, it means we have two parts. One is DRF, it means disaster refinancing, and another part is disaster risk management. And in parallel, it means we align between the two, and we had created the action plan for this committee. This committee is chaired by our Prime Minister. Yeah, this action plan is a roadmap to build a safe and resilient community for sustainable national development with common goal of reducing loss of life, economic loss, and damage to infrastructure. 4 strategic goals and 18 priority programs to implementation are set out that include disaster preparedness or emergency response plan, preparation for disaster, recruit and protective equipment, and public awareness about hazard caused by disaster. Next slide, please. Our existing disaster risk financing tool, we have the ASEAN and ex-post. On the ASEAN, we have the tool that called for the contingency budget, Cambodian food reserve system that I will present later, and agriculture insurance. For the data from the Ministry of Economy and Finance indicate that the average of 219 million representative around 3.19% of the total government budget expenditure was allocated for contingency purpose between 2017 and 2022. Food reserve system is an in-kind reserve fund that stockpile rice seed, rice, and vegetable and can be provided to people affected by the disaster. Regarding to agriculture insurance in 2021, crop insurance was available through one private sector insurer called the Forte Insurance Company. Ex-post financial instruments are source of finance that are identified or become available during the following disaster. The form of export disaster financing used in Cambodia include the budget reallocation, donor assistance, and external debt. Next slide, please. Another tool for the DRFS is the Cambodia Food Reserve System. The sub-degree creating the Cambodian Food Reserve System is planned that the total stock of the food reserve is to be 20,000 tons, of which 3,000 tons, 15% is kept as physical stock of rice, and 15,000.5 tons, around 77.5% is kept as cash reserve. It means we keep two parts. One part is as physical stock in case immediately we could deliver it, and then another part is kept as the cash reserve for this for this reserve stock. And the total amount of the seed stock is equivalent of 5,000 tons, of which 2,000 tons are seed and another 3,000 tons is in cash reserve, while the total amount of stockpile of vegetables, seed, and crop are 1,000 tons, 100 tons, of which 50 tons are seed and 50 tons are cash reserve. So on these three kinds of the reserve, it means we keep one part is as the physical and another part is as the cash. This reserve of seed, rice, and vegetable are allocated for local community that have been affected by disaster where their crop have been damaged or destroyed. This assistance aims to support recovery and help restore agricultural product in the impact area.
Mr. Somphai, I think you went on mute by accident.
Yeah. Okay, sorry.
Yeah. No worries.
Next slide, please. Yeah, another tool for the agriculture financing insurance is the agriculture insurance. Agricultural insurance in Cambodia is still the very early stage of the development in Cambodia, led by private sector. From 2015 to 2017, Right Insurance was first pilot in Cambodia by 40 companies, along with the participation of Indian with risk technician and local microfinance institution, AMK. Then in 2018 to 2019, with support from the Ministry of Agriculture, Forestry and Fishery, Forte Insurance has become an active member to explore the possibility and develop a national strategy. In the same year, with the technical assistance from the fishery specialized technician, AMK and other stakeholders, the soil moisture index insurance was pilot. In 2020 until 2022, with support from the Swiss Agency for Development and Cooperation, MAF, it means Ministry of Agriculture, and Syngenta Foundation for Sustainable Agriculture, with the index crop insurance was pilot to reduce the vulnerability of farming community to extreme weather event. Lately, in 2023, Pre-War Micro Insurance is the first micro insurance company that starts selling crop insurance in Cambodia. Next slide, please. To sum up, there is 6 main policy and strategy addressing the disaster refinancing for agriculture in Cambodia context, such as disaster refinancing strategy. It means we had been developed it into 2 parts. One is the development of the OF enabling environment, and another one is tailor the solution, the OF solution. In the national agriculture development policy, it means growing sustainable and increasing resilience to climate change. For the national action plan on the disaster reduction, the action plan is designed to enhance disaster resilience across the nation, minimize the impact of disaster on people, the economy, and society. Budget instrument, we have the ex-ante and ex-post of disaster refinancing tool that on the ex-ante is the contingency budget, Cambodian food reserve system, and agriculture insurance. On the ex-post is the budget reallocation, donor assistance, or external debt. And the next one is the Cambodia food reserve system. This means the stock, the total stock of food reserve and the total amount of the seed stock. For the agriculture insurance, it means we already started from the 2015 and until today. But until 2023, only the pre-war micro insurance company who is selling the insurance, micro insurance. Next slide, please. Yeah, this one is my end of my slide that as we are to end my presentation. I would like to thank you all for your attention and participation. I would found the information valuable. I hope you found the information valuable. If you have any question, please feel free to ask me. Thank you.
Thank you so much, Mr. Somphai. I think it was a very comprehensive and interesting presentation on how you're thinking about agriculture really within the central part of your DRF strategy. And you've also got several different instruments. So very interesting experience. And I'm sure there's going to be questions either in the chat or in your email later on from several of the participants. And we have some coming up in the Q&A as well. With that, maybe we'll move on to the next country. So we've heard from 2 countries in Southeast Asia. We're now going to move on to a country in Europe and Central Asia. So we're going to hear from the experience of Turkey, and we're going to hear a little bit about the policy and regulatory frameworks that are in place there to basically prioritize, how disastrous finance agriculture policies are established, how some of the stakeholders are engaged in that process, what is the ecosystem of public-private partnerships, and how does that inform this regulatory framework. So with that, I would like to invite Mr. Ramazan, who is the Assistant Insurance Specialist in the Insurance and Private Pension Regulation and Supervision Authority. Mr. Ramazan graduated from Istanbul University with a degree in political science. He started his career at the Insurance and Pension Regulation Authority. He has been working there and serving in the Department of Intermediaries and Special Institutions, and has a lot of experience with regulation implementation and supervision activities. So over to you, Mr. Ramazan.
Okay. Hello, everyone. I'm Ramazan Küçükolgun. I'm Assistant Insurance Specialist at Insurance and Private Pension Regulation and Supervision Authority, IPRSA. We call our institution IPRSA shortly. I will present you the agricultural insurance pool system of Turkey. Next slide, please. Agricultural insurance began in Turkey with crop hail insurance in 1957. You can see the timeline which shows insurance lines launched by year. Cattle insurance in 1960, poultry insurance in 1984, aquaculture insurance 1990, and finally the agricultural insurance law in 2005. Before the state supported agricultural insurance, two different programs were available to help crop producers recover from the financial effects of natural disasters and protect them from unavoidable risks. We can regard them government aid program and private insurers. After catastrophic events, the government made financial assistance available to farmers on an ad hoc basis, primarily as direct crop disaster payments and emergency livestock assistance. On the other hand, private insurers tended to insure only low-risk customers or customers with very specific risks. Before legislative drafting process of the law, many meetings were held, and representatives of chambers, insurers, government, and farmers engaged in dialogue to build a system that would make agriculture more sustainable and protect them farmers from the financial effects of natural disasters and adverse weather. By the way, international agricultural insurance examples were examined. An accurate model for Turkey, our country, was determined. Finally, the agricultural insurance law was enacted in 2005 to build an agricultural insurance system, which is a public-private partnership, and TARSIM issued its first policy in 2006. I will call TARSIM as the agricultural insurance pool or just the pool in following slides. Next slide, please. In this slide, you can see TARSIM's effect to agricultural insurance of Turkey. You can see massive increase in numbers, especially numbers of policies has been rising almost 2000% for crops and animals. Also, insured area for crops and number of insured animals have significantly increased. You can see. Next slide, please. Here is the legal framework of the system. Turkey's insurance sector is mainly regulated with the Turkish Commercial Code and the insurance law. However, the agricultural insurance has its own law. We call it the agricultural insurance law. Also, two main regulations were published on the basis of this law. One of these two regulations defines structure, scope, activities, and financing of the agricultural insurance pool, while the other one arranges agricultural insurance operations. Every year, two different types of presidential decisions are published. One of these is regarding the coverage products and the amount of the state premium support by product, risk, region, and enterprise scale. The other one is about the excess of loss support of state. General conditions, you can see, are the terms that are prepared for each insurance branch and that insurance companies cannot act contrary to. The main content of insurance contracts shall be determined in accordance with the general conditions. Tariff and instructions are the terms that provide coverage up to the sum insured for financial losses directly caused by the risk covered by the presidential decision. General condition and tariff and instructions is updated each year as prepared by the pool's board of directors and confirmed by our institution, IPRSA. Next slide, please. The pool, TARSIM, we call it the pool, has two management bodies. One of these is board of directors. The graphic is about the board of directors. The board has 7 members. 4 of 7 are from the government. 2 of them are from Ministry of Agriculture and Forestry, and 2 of them are from us, IPRSA. 1 of 7 is from the management company, is a private company, and 2 of 7 are from non-governmental organizations, Union of Turkish Agricultural Chambers and Insurance Association of Turkey. The other part of the body is the management company that carries out all the tasks and operations of the pool. Development of insurance products, underwriting procedures and principles, actuarial studies, reporting, training and assignment of loss adjusters, public relations and publicity campaign operations are carried out. All insurance companies licensed by IPRSA to transact agricultural insurance have equal shares in the management company, which is a joint stock company. Companies' operations are carried out with 16 regional directorates. As you see, this type of management is a comprehensible example of public-private partnership. Next slide, please. As you see, the pool has 4 main key blocks: state subsidies, public-private partnership, central structure, and constant dialogue. The pool was also established in order to provide coverage to the farmer on voluntary basis, to ensure standardization in insurance contracts, to create a suitable environment for the transfer of risks, to pay indemnity from a single center in case of damage, and to develop and expand agricultural insurance. The pool has many mechanisms to provide constant public-private dialogue. So the government develops policy tools through dialogue with the pool. Meetings among the pool and the government and events attended by all stakeholders of agricultural insurance sector are considerably decisive for legislative draftings. Next slide, please. When we talk about the pool implementation, with the pool implementation, it will be ensured that catastrophic risks such as drought, frost, etc.
Sorry, yeah, just a second. I think there's a technical glitch with the sharing of. We cannot see the PPT anymore, Anusha, or Sonal, or Elena. Maybe Mr. Ramazan, you can keep going while we. Would you be able to continue? There it is.
Okay. With the pool implementation, it will be ensured that catastrophic risks such as drought, frost, etc., which cannot be afforded by an insurance company alone, can be covered. Reinsurance capacity and scope will be expanded by encouraging reinsurance participation. Premium and excess of loss support of state will be used effectively. Unfair competition in prices will be prevented. Loss adjustment activities will be centralized and standardized. and claims will be processed quickly and paid fairly by a central entity. Next slide, please. Here is the risk transfer mechanism of TARSIM. The farmer demands, first of all, the farmer demands insurance for their agricultural activities and apply to insurance companies or its agents. Insurance companies assess the demand, issue policies, and conduct standard agricultural insurance contracts on behalf of TARSIM. The farmer pays a certain part of the premium written in the policy. Also, the state provides support for the rest of the insurance premiums on behalf of the farmer. All premium of farmers is collected by the individual insurance companies, and the entire premium and the total risk are transferred to TARSIM. Insurance companies get a commission from TARSIM for these activities. TARSIM is authorized to retrocede risks to insurance companies in Turkey. It is voluntarily participation and provide reinsurance cover by domestic and international reinsurance companies. If the reinsurance coverage is insufficient, the government will provide excess of loss support. Next slide, please. As you see, there are 7 insurance lines transacted by the pool: crop, village-based yield, revenue protection, greenhouse, cattle, sheep and goats, poultry, aquaculture, and beehives. Damages are transmitted by the farmer to the pool. Taskings of loss adjuster is highly centralized, and the pool considers the region where the loss adjusters live. Loss adjuster trainings are organized in cooperation with the management company and the government. You can see the public-private partnership again. They carry out the risk assessment and damage determination activities on behalf of the pool. Indemnity payments are centralized and standardized. The pool pays indemnities to the farmer in due course. Indemnity payments, income and expenses, works about business and operations of the pool are supervised by the Ministry of Agriculture and Forestry and IPRSA. Next slide, please. In conclusion, I want to mention the importance of the pool in government policies. The pool shared the catastrophic loss among the farmer, in insurance industry, and the government. So it contributes to the government's budgetary discipline as reducing disaster relief. On the other hand, it provides permanence of farmers' activities after natural disasters. As you know, climate change is the most important threat for the agricultural industry throughout the world. So one of the main policies of government is to provide sustainability for agricultural activities and the farmers' economic stability. Also, to prevent migration from villages to cities is a primary sociological and demographic purpose for the government. Finally, I would like to emphasize that the pool, as implementer of the state-supported agricultural insurance, is a significantly important organization for the government of Turkey. Thanks for your attention.
Thank you so much, Mr. Ramazan. I have to say, very, very practical and informative presentation on the Turkish pool, and also you can see such diverse experiences coming from. We just heard from Cambodia and how they're thinking about this, the agriculture program in their country and how Turkey thinks about it. Even though there's many similarities and themes, but there's different ways in which the same problem it can be solved, and I think that's the most interesting part about having different countries come together to share this experience. With that, we will now move on to the next session. So thank you for all the excellent presentations. It's now it's time for a quick round of questions. And, we've got a lot of questions on the chat. We'll not be able to take all of them, but we'll try to synthesize a few and perhaps bring you in one at a time, and then maybe if there's enough time, also some collective questions. So maybe the first question can be to Dr. Somphai, if that's all right. Since you presented really a very, very comprehensive journey of Cambodia when it comes to disaster risk finance, and particularly focusing on the agriculture engagement. There's many questions in the chat that are talking about, one thing is developing good and robust policy. Another thing is then implementing those policies. And so perhaps if you could shed some experience on what are some of the challenges, that you have faced or are facing on kind of implementation of your policy frameworks, and then how are you overcoming those challenges, or what are some of the lessons that have been learned? So maybe Mr. Somphai, maybe that first question is for you.
Yes, thank you, Sumiti. Regarding to the strategy, normally when we after we develop it or we create it, it may have some challenge, and then the challenge that we for the that when we implement is we need to strengthening institution capacity and coordination, and that is when the challenge is when limit interagency coordination, and solution is establish a central disaster refinancing financing for oversight and coordination with the continuous training program for clear guideline. That is mean our policy we have been create for the one action called the disaster risk financing, disaster fund, that we need to do the study. And second is building technical expert and data infrastructure, because when we doing the insurance for the agriculture, the most important is the data structure. It means the limit of the data source. So we need to collaborate with the international organization for data sharing network and establish our local data collection protocol also. And another one, the third one is sustaining financing, financial resource and access to fund. Also, that is the issue, the challenge that we face. And the number 4 is the public awareness and engagement that we so this is our issue challenge. It means limit community level understanding of the DRFS mechanism, because the agriculture here is not like a modern agriculture yet, so it may some issue, some challenge with that. And the first one, it means the last one is the monitoring, evaluation, and flexibility. This is the most important tool that we must integrate into this policy, because if we do not monitoring, and if we lack of monitoring, evaluation, and flexibility, it means we does not know how well it's worked for this policy. So this is the last one, the last tool that we need to do, so that on the policy also we have the action for the M&E. Yeah, thank you for this question, and then this all my answer. Thank you.
Thank you very much, and very interesting, of course, to the last point that you made, which is on monitoring evaluation. Given that so many countries are starting their journey on these kinds of solutions, that point it can be emphasized enough, like you said, because it's important we learn from what we're doing and change, adapt, modify kind of our own programs as well. And actually that brings me to questions that have come up on the Turkey program in the chat, which are really around, the Turkish program has been operating for quite a while now. And I see from what we saw, it's very interesting, robust regulation around, almost like a separate for poultry, separate for crop, quite distinct. So perhaps questions around, one is, over the journey, have you seen the regulations change and evolve to meet kind of the growing nature of the program? So that's something that came up in the chat. Also, questions that are received are around kind of what are some ways in which Turkey manages to incentivize private sector to stay engaged in kind of the agriculture insurance market. Is there a robust, bustling domestic market? I mean, what are some of the challenges there? What are some of the ways in which the right incentives are created, be it from a regulatory perspective, specifically? So I think it would be interesting if you could talk a little bit about these aspects in terms of how evolution, the program has evolved and how the regulations around it have evolved, and how you've, through regulation, incentivized engagement of different stakeholders like private sector. Mr. Ramazan, this is for you since it's about the Turkish program.
Okay. First, I will answer Anna McCourt about the overwhelming risk. She questioned me. Dear Anna, Tarsim gets reinsurance coverage and state excess of loss support almost 50% for overwhelming risks. If the damage premium rate for the pool exceeds 150%, excess of loss support is offered by the state. General conditions and tariff and instructions is updating each year for these numbers. Is changing these numbers with the tariff and instructions and general conditions.
Thank you so much, Mr. Ramazan. Would you be also able to answer some of the questions around how regulation has evolved with the program, and if there's anything you could say about how you keep the private sector engaged in the program? Are there any incentives? Yeah. In terms of regulatory tax.
The management company is a private sector company with equal shares of insurance companies. The management company has a role in legislative draftings and tariff and instructions that are updating each year. The management company demands takes the demands of farmers, and they offer the government for the chains for farmers' needs. Also, regulations and tariff and instructions and general conditions is updating each year, and regulations if they need the government take the decision to it's changing.
Okay, thank you so much. Very interesting points and very helpful. Perhaps I'm going to, in the interest of time, move to our colleague from Vietnam, who I hope she's not having internet connections. So if I ask her, if we don't hear from her, we'll just move on. But perhaps just a very quick question to our colleagues who from Vietnam, who talked about really the importance of public financial management systems and ensuring that that policies around them are quite robust as well. If we could hear from perhaps Ms. Thuy on from a PFM perspective, how can we ensure sustainability of disaster risk finance and agriculture schemes? If there's any experience that you can share from your country.
Yeah, thank you so much for the questions. Actually, I just prefer the presentation of Ms. Hằng earlier. She mentioned that first we should prioritize the segment or targets, and then we decide the interventions, and then we address the issue. Relevant to the PFM, I think that At first, we should develop a strategies from the National Disaster Prevention and Response, in which we can identify the important targets as well as assessment. The second part is we can decide the interventions. I mean, that's the financial resources to cope with the situation. I mean that we can develop the financial tools, different financial tools like the state budgets, not only the state budgets, but also like the insurance, the bonds, and we should use the social contributions, and we can mobilize more financial resources to for the natural disaster. And the final one is address the issue. I mean that we need to cooperate amongst the ministries, in which we should specify the task as well as the responsibility for each ministries to solve the issue and improve the efficiencies of investment as well as the government expenditure to address the natural disaster. So that is my answers.
Thank you so much, Ms. Siri. And I've been told by the team now that we are running over time. So I would like to just say that this has been an extremely interesting and thoughtful session for all of us. And we've learned a lot from the various country experiences, be it in your interventions around, the need for prioritization when it comes to developing your programs, when it comes to developing robust regulations, how you target those effectively, the challenges around financing, and the challenges around ensuring kind of that there's a robust implementation of the policies that are put in place. So big round of applause to all of you. I would say virtual applause since we're here virtually. And without further ado, in the next few minutes, we would like to hear a few closing remarks from Ms. Emiko Todoroki, who is the acting practice manager from Finance, Competitiveness, and Innovation Global Practice. Emiko is leading a team of experts within the World Bank who offer analytical and advisory services for policy reforms and financial instruments against climate shocks, disasters, and a wider range of crises in more than 70 countries. Previously, Emiko worked in lending programs as well as technical programs in Europe and Central Asia, as well as in the Africa region on financial and private sector programs. So with that, Emiko, I'd like to invite you please to provide some closing remarks.
Thank you so much, Sumati, and thank you so much, everyone, for the active participation. I saw last bit of that, and it was amazing. Thank you for sharing your knowledge and insight into today's session. So today's session has highlighted the importance of developing robust and effective DRFA policy, legal and institutional frameworks with key considerations. The highlight from Cambodia on DRFA can be embraced under the holistic national DRF strategy and linked to integrated agricultural sector and agribusiness development. An insightful journey that Turkey has taken to build comprehensive frameworks for agricultural insurance, including the integrated policy and institutional frameworks, as well as the successful implementation of public-private partnerships in agricultural insurance. The example from Vietnam on how the government managed public finances as related to agricultural losses due to disasters, including the consideration of using public funding support schemes and linked to market-based schemes such as insurance and credits. All these insights from our discussion today will guide future efforts in strengthening agricultural resilience, especially in strengthening the frameworks for DRFA. So as we look forward to our upcoming seminar, we will continue to build on the foundations laid today to further delve into the successful examples and lessons learned from different DRFA schemes around the world, and especially in the ASEAN +3 region. So I'd like to extend my heartfelt gratitude to all the participants today for your dedication and active engagement. Your efforts are important in advancing DLF for agriculture. And finally, special thanks to our partners, the ASEAN Secretariat, ASEAN +3 DLF Initiative, and SEADRIF for the collaboration. Your commitment has made the community of DLF participations and practitioners stronger and empowered us to drive impactful change. So once again, thank you so much for the excellent session today, and we look forward to your continued participation in the upcoming session of this Global Knowledge and Exchange series. So back to you, Sumati.
Thank you so much, Emiko. And again, a big thank you to all of you. We look forward to seeing you in our subsequent webinars. Don't forget, for those of you that attend all 4, there will be a certificate and potentially other future engagements as well. Tentatively, the second webinar is planned for later in November, around November 20. So please look out for our save the date when it's sent. Thank you so much, and I wish you all a good morning, good afternoon, good evening, good night, wherever you're joining from. Thank you so much.